So I want to talk about the Great Depression. And for our purposes, the Great Depression period can be broken into three segments. And so we can start with the stock market crash, we can look at the New Deal, and then we can look at other aspects such as crime and the Dust Bowl and the general run of how the Depression eventually came to an end. And so starting with the stock market crash. Well, we know what a stock market crash is from our experience in 2008, where the stock market rises to such a point that it's higher than the actual value of stocks. And so stocks are overpriced. And when investors realize this, the stock market plummets. And if the stock market plummets enough, a lot of banks and finance houses will get into trouble. They'll stop lending, and businesses can't get loans, businesses can't get credit. People are afraid to put their money in the bank. There's a run on the bank. And so economic activity starts to seize up. That's what happened in 2008, and that's what happened in 1929 in the great stock market crash of 1929. Now, how did that come to pass, though? How did that happen initially? Well, there were two gentlemen, Montague Norman of the Bank of England and Benjamin Strong of the Federal Bank of New York. And they looked at the situation in Europe and the situation in the United States and said, well, the United States economy is doing very well, but the British economy is still stuck, after World War I, is still stuck in a slump. So what we should do is have the British economy switch back to the gold standard. It should measure its sterling, its pounds, its currency on the gold standard. And to help do that, we will give a low interest loan from the United States. So we lower interest rates in the United States, and we'll provide a loan to get England onto the gold standard. But when England moved on to the gold standard, that complicated the English economy. They couldn't keep up with that. And it lowered interest rates in the United States, so more and more people were able to get money cheaper, and they took that money perhaps and put it into the stock market, and stocks got reached a higher and higher price, eventually leading to this big bubble which eventually burst. And whereas England was having trouble by trying to stick to this gold standard, and it didn't help its businesses that politicians kept insisting that no, England has, the price of the English currency has to be pegged to gold, and we're going to borrow money from America to shore up our currency. All in all, the actions of bankers and this irrational exuberance, this pursuit of money in the stock market, led to a huge bubble which eventually burst, which put huge pressure on the banking system and put huge pressure on businesses. And so money, what starts to happen is people start to withdraw their money from the banks, and banks start to close, and businesses can't meet their payroll, and people can't put food on the table, so to speak. And so as the government is looking at this, how should they respond? Well, Herbert Hoover, who was the president at the time, about 2 years into this, he's up for re-election, and Franklin Delano Roosevelt runs for re-election and promises to help fix these. So Roosevelt is elected in 1932, and he proposes a bank holiday. He says, okay, to stop all these banks closing, to stop there being a run on the banks, we're going to close all the banks for a few days, and that will calm things down. And here's a description of that process. So one thing after another, the dominoes are falling, confidence is being lost, there's a run on the banks, and then Franklin Roosevelt is elected, and he wants to restore confidence. And so one of the first things he does is give a fireside chat on the radio. He gets on the radio to calm the nation. So at 10 o'clock on the evening of Sunday, March the 12th, Roosevelt gave the first of his fireside chats over the radio. My friends, he said, I want to talk for a few minutes with the people of the United States about banking. I want to tell you what has been done in the last few days, why it was done, and what the next steps are going to be. And in simple and clear language, he explained to the 60 million people listening in countless homes across the nation, when you deposit money in the bank does not put the money in a safe deposit vault, it invests the money, it puts it to work. I know you are worried, he told them, but I can assure you, my friends, it is safer to keep your money in a reopened bank than under the mattress. Basically encouraging people, have faith in the banks, don't pull your money out of the banks, and restore confidence. And the next day, the comedian, famous Depression-era comedian Will Rogers said, our president took such a dry subject as banking, and he made everyone understand it, even the bankers. And so these are some of the steps that Franklin Roosevelt took to restore confidence in the banking system. But now he had to repair the economy. So he undertook what was called the New Deal, which was an economic program aimed to put people to work, aimed to regulate the economy.